What's up, everyone? Today we're activating the ultimate cheat code for one of the most feared topics in the entire audit and risk exam, uncorrected misstatements. Let's get into it and level up. Okay, just picture this for a sec. The clock is ticking down, final 15 minutes, your heart is absolutely pounding, and then you see it, a massive question asking you to evaluate a whole list of audit errors. You might feel that panic start to set in, right? Thinking you're about to fumble the bag. But what if I told you there's a blueprint for this? A step-by-step framework that turns that panic into pure confidence and, more importantly, scores you those merit-level marks every single time. Well, that's exactly what we're activating today. Okay, so first things first. Before we can even use the cheat code, we gotta speak the language. There are three main types of misstatements you absolutely have to know. Getting these straight is the very first step to building that flawless answer. First up, we've got the factual misstatement. Honestly, this is the easy one. The standards basically say this is a misstatement where there is zero doubt. It's a straight-up error, a typo, a calculation mistake. The math just ain't mathing, and there's really no debate about it. So for example, let's say King Von's accountant is processing an invoice for some studio time and accidentally keys in $1,000 instead of $10,000. Boom, that's a factual misstatement. It's not an opinion, it's just a simple, clear-cut mistake. Next, we have judgmental misstatements. Now, this is where things get a little subjective. These pop up from disagreements over management's own decisions. Things like accounting estimates or the specific accounting policies they decided to use. It's less about right or wrong and way more about reasonable or unreasonable. So imagine you're auditing Juice WRLD's estate. Management has put a value on his vault of unreleased tracks, calling it an intangible asset worth $10 million. But based on your analysis of streaming data and what the market looks like, you think a more reasonable number is $5 million. That $5 million difference, that's a judgmental misstatement. It's a battle of professional judgments. And finally, the one that trips up so many people, the projected misstatement. Now listen up, this isn't an error you actually found. Instead, it's your best guess, your estimate of the total error in an entire group of transactions that you figure out based on the errors you found in a small sample you tested. Let's say you're testing 21 Savage's expense claims. You can't check every single one, that's impossible, so you test a sample. In that sample, you find $500 of expenses that shouldn't have been there. A projected misstatement is when you take that sample error and blow it up to estimate the total error across all of his expense claims for the year. And trust me, forgetting to do this is a one-way ticket to failing this question. All right, now that we've got the lingo down, it's time for the main event. This right here is the 5-step cheat code. It's the exact blueprint you need to structure your answer perfectly and hit every single one of those marking points. So here it is. Step 1, accumulate. You round up every single misstatement you found. Step 2, compare. You stack them up against your materiality levels. Step 3, consider patterns. You look for the story behind the numbers. Step 4, request correction. You always have to ask management to fix it. And finally, step 5, check sufficiency. You ask yourself, is my work done here, or do I need to dig deeper? We're about to see this in action right now. Okay, let's put this whole thing into practice with our first scenario. The task word from the examiners here is evaluate. That means they want you to critically assess the information and make a solid professional judgment. This is where you really show them what you've got. So you're on the OVO Sound audit. It's the end of the year, and Drake's finance team hands you a list of mistakes they already know about but just haven't fixed. Your job is to take this list, apply our framework, and figure out what it all really means. Here's the data we're working with. We got a factual misstatement. They understated merch revenue by 50 grand. And we've got a judgmental one. They overvalued the certified Loverboy brand by 120 grand. The total comes out to 170,000, and our performance materiality is set at 200,000. Okay, let's apply the code. Okay, step 1 is super easy. We accumulate the misstatements, which gives us that total of 170,000. Step 2, we compare. Now, here comes the big trap. A failing answer stops right here and says, well, 170K is less than 200K, so it's fine. No, that is an instant fail. You have to go beyond just the numbers and consider the qualitative side of things. Let's see how the rest of the answer builds out. Step 3, are there any patterns here? That $120,000 overvaluation of the brand? That could be a red flag for management bias. Are they trying to make the brand look way stronger than it actually is? Step 4, We must formally request that management corrects both of these errors, and if they refuse, we write it down. And finally, step 5. Is our evidence sufficient? In this case, yeah, it seems to be. The errors are clear, and we can form a conclusion. Now that is a full marks answer. All right, let's move on to scenario 2. We're sticking with the task word evaluate, but this time there's a little twist. We're about to dive into the world of sampling and the number one trap that students fall right into. So here's the setup. You're auditing 21 Savage's tour expenses. The total expense population is a cool $1 million. You can't test it all, so you pull a sample of 100 grand. Inside that sample, you find $8,000 worth of errors. So what do you do with that $8,000 figure? The trap here is just writing down the $8,000 error you found. That's not the full story. You have to project it. So for step 1, we calculate that projected misstatement. We take the error rate from our sample, which is 8,000 divided by 100,000, so that's 8%, and we apply it to the whole population of 1 million. That gives us a projected misstatement of $80,000. For step 2, we compare that $80,000 to materiality. And for step 5, this high error rate might make us question if our evidence is even sufficient. Maybe we actually need to do more testing. So we've seen the traps in action, but let's just put them side by side. Seriously, understanding what separates a basic pass from a high-scoring merit answer is the whole key to unlocking your potential in this exam. And this just lays it all out, doesn't it? A fail answer looks at the Drake scenario and just goes, it's below materiality, we're good. The merit answer, using our cheat code, talks about the quantitative part, but then immediately pivots to the qualitative risk of management bias and the need to request correction. A fail answer totally forgets to project the sampling error. The merit answer projects it and then evaluates what that projection means. A fail answer doesn't even think about evidence sufficiency. The merit answer always concludes by considering if more work is needed. You see the difference? It's all about the depth. So the most important point here is this. Auditing is not just about finding typos and math errors. It's about being a detective. It's about looking at those errors, no matter how small they seem, and evaluating what they're trying to tell you about the company, its internal controls, and its management. Look, if you remember nothing else from this entire thing, please remember these 2 rules. 1, always project your sample errors. Do not leave those marks on the table. And 2, always consider both the numbers, the quantitative, and the story behind them, the qualitative. That's not just advice. That is literally where the difference between passing and getting a merit lies. No cap. So now you have it. You've got the framework, the cheat code to absolutely nail these questions. But the real challenge isn't just to pass an exam. It's to use this structure to build the mindset of a true professional skeptic, to question everything, to see the story behind the numbers, and to really understand the business you're auditing. So the question is, how will you level up your game?